Hey traders, it's DD. I'm back. We're doing another video. I really hope you guys are liking this stuff. I'm having fun putting it out, learning myself. You know, when you teach, it's different than when you just know it in your head. So it kind of like helps me as well. So today we're going to talk about the importance of risk management. And this is like a super important part of trading. I'm sure you've heard about it already. Most beginners don't know the importance of risk management, and they blow their accounts and lose a lot of money because they're not taking risk management into account. So let's learn a little bit about it and see what it's about and how it affects your trading, why you need it, and the benefits of it. Okay, so what is risk management? It's not just a term for trading, it's a term for all business. And what it is like the process of identifying potential risks and minimizing their negative impact on your business. So if I have a grocery store and I sell, refrigerated items, and I got to make sure that I don't buy too much to put in the fridge because then it's going to spoil and that's going to affect my bottom line. Also, if I have, a mouse problem in my storage in my grocery store, that's going to eat away at some of the food and also going to cause me a loss. So I got to get an exterminator for that, and I got to make sure that I'm on top of my inventory to buy exactly how much I need, or maybe a little bit less, but understanding what the potential risk is for loss of spoilage and making sure that I do it. And the same thing is true in trading. We have to identify the potential risk and minimize it, and that's risk management. And the potential risk in trading is absolutely enormous. I mean, you could lose your entire account in one trade. So we got to make sure that doesn't happen, and we have to minimize that negative impact. Okay, so what is the proper risk management necessary in trading? So it's pretty simple. First of all, always risk the same percentage of your capital per trade. Okay? So if you have a $50,000 account and you decide that you're going to trade, 1% per trade, so that means you're going to risk $500 per trade. And, what really gets traders in the beginning is they get very excited about good setups and good trades. And they decide, oh my God, this is like perfect. I've been waiting for this trade my whole life. The Fibonacci indicator is exactly at the golden rule. It's just been going up and up, and I was patient for all the fake outs, and it must go up now. And I definitely have to risk 10%, 15% of my account on this because I could just become a millionaire so quick. You can, but you could also lose your money so quick. And, risk management tells us to minimize the potential risk. And we have to look at the market as random, because it is. And there is no such thing as a perfect setup, because even though something looks perfect and it can have all the check marks on everything in your trading system, but there's no doubt in my mind, and it's a fact, that you could lose in that trade. And the market does whatever it wants to do. It's totally random. We have an edge, but it's definitely random. So therefore, we always have to risk the same percentage of capital per trade. Now, if you're, an advanced trader and you learn how to scale in and scale out, and, how to move your stops and take profits, it could be, somewhat dynamic. Nevertheless, you're very clear before you get into a trade about how much capital you want to risk per trade. Okay, the second part is understanding your drawdown. Now, this comes from backtesting and forward testing. If you practice enough and see how your method works, like by backtesting, and then also practicing it with a demo account or a small amount of money on the market as you go forward, then you build the confidence and you realize, I've been backtesting for the entire year of 2020. And in 2021, we're in July now, and for the past 7 months, I've never, ever seen more than five losses in a row. Never happens to me. 2 times I lost 5. Besides that, I've only lost 3 times. Okay, so that means it's very, very uncommon in your trading system to lose more than, 5 times in a row. So therefore, if you're comfortable losing 5 times in a row, nobody is. But if you're comfortable losing it, let's say you risk 2%. So you could lose up to 10% of your account. If you have a $50,000 account, you could lose $5,000 and you'll be down to $45,000. But you're comfortable with that because I might lose 5 times in a row, but if I'm confident in my trading process, I won't lose more than 5 times in a row, and my account will go down from $50,000 to $45,000. And I'm confident because that'll be my big, losing streak, and then I'll be right back. So fully understand what your potential drawdown is, right? You got to identify the risk. What is the risk? Is your risk 5 losses in a row? Is your risk 10 losses in a row? If your risk is 10 losses in a row, so then from a $50,000 account, then you could go down to $40,000 if you're risking 2%. If you're risking 4%, you could go down to $20,000. Do you want to have that potential risk? I don't know. It's up to you. So once you know that you're risking the same amount per trade, the same amount of capital, percentage-wise, and then you understand your potential drawdown from all your historical results. So based on the above, you only risk what you're comfortable losing per trade. Again, you have that $50,000 account. Somebody says, I could lose 10 times in a row. So if you're risking the 2%, so you could be down to $40,000. Are you comfortable with that? If you are, then go for it. If you're not, then risk maybe 1%, and you'll be down to only $5,000 after 10 losses in a row. That's basically it. We got to identify what the potential losses are. And in trading, that's your drawdown based on your results from your backtesting and your forward testing. And then only trade what you're comfortable with. If you're getting all worried about losing this trade, then trade less until you're very comfortable with that. Because losing is just part of this game, and it's an important part of this game. And that's the randomness of it. And therefore, we're just going to want to be able to lose and know that we could lose, and we're losing a certain amount of capital per trade. But overall, we have confidence in our system that our system could make up for those losses and even more. So that's risk management, guys. I think it's super, super crucial. And I hope these videos are helping you guys. Please like them and leave comments and let me know what else you'd like me to talk about. And we'll just keep on coming out with it. All right, guys, take it easy. DD out.